Heading toward the closing bell, and we're going to get there with Peter Tchir, head of macro strategy at Academy Securities, also Bill Baruch, Blue Line Futures president. They're going to stand by because right now we're going to Jared Blickery, who's watching these markets go up, up, up. Jared?
That's right. And just within the last few minutes, we got a record high on the S&P 500. Let's check out the Wi-Fi Interactive, where we see the three majors in the green. No record high on the NASDAQ, still has only clawed back about half of its losses. Russell 2000 hit a record intraday high on the open, but is now in the red just slightly. And the picture on the mega caps here, still mixed going into the close. Apple's up over 2%, Facebook and Tesla just under 2%. But seeing the chip stocks bounce back a little bit today, that has been nice. Broadcom notably up 4%. But today has really been about the travel sector. And Adam, I know you've been talking about that quite a bit. And we're following it closely as the JP Morgan Industrial Conference has sparked a number of headlines. United is up 8% and American is up 7%. Over the last 2 days, we've really seen a pop here. Here's United. That's up 12.5% since the close on Thursday. Guess what else has been up today? And we'll take a look at that. But first, we're going to take a look at the banking sector. Now, that is in the red. JP Morgan coming off record highs last week. That's down 0.5%. Goldman Sachs also off 0.8%. We are seeing the 10-year T-note yield take a little bit lower for most of the day, but not seeing that translate into any FOMO for the TINAs. Let's take a look at the sector action. Discretionary has been the outperformer today. That's up over 1% along with utilities, real estate, and tech. Only energy and financials languish to the downside. But here's that screen I was looking for. Retail, another story of the day. Lots of action in Macy's and Nordstrom.
Another record-setting day here on Wall Street as we shake out the final trades of the day. S&P, Dow, and NASDAQ all ending the day in positive territory. NASDAQ was today's big winner, up just around 1%. We saw some buying action into the close. You can see the Dow closing up 173 points. S&P now up 25 points. That's good for 0.6% gain. Jared was just going through some of those all-time highs that we saw today. Dow and S&P both closing at record highs, as well as the industrials, communications, and home builder sector, as well as the transports at a new record high today. In terms of some of the leadership action today, yes, travel names leading the way. That's a big reason why we're seeing consumer discretionary as the biggest gainer in terms of sectors today, followed by utilities, real estate, and technology. So a bit of a mixed picture. We want to bring back in our guest. We have Peter Tchir. He's head of macro strategy at Academy Securities, and of course, Bill Baruch, Blue Line Futures president. Peter, first to you, just the leadership that we're seeing today. A lot of the travel names, United, American, and Southwest here amongst the winners when you take a look at the S&P's biggest gainers. What do you make of that? And I guess, what do you expect to see in terms of leadership going forward?
You know, that's been one of our big themes of this year is anything that still has a COVID discount built in, you want to own. COVID is going to be dealt with, and we are going to see a normalization. You're going to see some sort of business travel. You're also going to see, I think, elderly travel. So we've been a big fan of squeezing out that COVID discount. I think that will continue to work out, right? People are not, fully understanding or betting yet on how robust this economy is going to be for the next couple of years.
But Bill, some people caught in the economy understand that inflation, some say price it in now, it's already here, especially if you're trying to build a house. Lumber prices have doubled. We're seeing commodity prices go up. What does this portend going forward? We're going to have inflation. Will the Fed step in?
Yeah, you said it there. And I think there is inflation already around. It's just not in the measures that the economic calendar will point to. CPI last week soft. PCE really hasn't done much either. So it keeps the Fed accommodative. It keeps Congress moving forward with a new spending bill from last week. So I think it's sort of a Goldilocks of narratives mixing together here right now, because you do have that economic demand that's out there. It's picking up. I mean, you mentioned lumber prices, crude oil is higher. There's a number of commodities across the board in the agriculture sector that are multi-year highs. So the inflation, for all intents and purposes, is already here. It's just not in the measures that the Fed is pointing to right now.
Peter, I'm taking a look at the notes that you sent over, and you said that it's crucial that you lay out your expectations on interest rates, as getting that right will make everything else relatively easy. So what are you expecting on that front? I guess, how high do you expect interest rates to potentially go?
I'm looking for the 10-year to go to 2%. And ironically, I think we're actually going to get a very dovish Fed this week, right? They're going to ignore inflation. They're going to say it's transitory. They really want this economic growth to kick in. And what I think that is going to do is actually cause a little bit of fear again in the 10-year and 30-year part of the curve. So you're going to see yields steepen as people say, whoa, if the Fed's really going to let things run hot, I don't want to own the 10-year at 1.6%. So I'm looking for a backup to 2% on the 10-year, maybe 2.5, 270 on the 30-year. And I think that's going to be a bit of a headwind for some parts of the stock market.
So let me follow up with that, Peter. Do we get a new operation twist? And what would that look like for us average investors? How would that work?
So what the Fed has done in the past is they do an operation twist where they take their balance sheet and they sell some of their short-dated treasuries, so the 2-year and in, and then they go and buy 10-year and out, typically in the 20 and 30-year part of the curve. And what that attempts to do is take some, let the front end rise a little bit and keep back end yields contained. I think they will ultimately get to that. There's some talk about them doing it this meeting. I don't think we're there yet. I think they need to see the 10-year at 2% before they start changing their current methodology. I think they're comfortable with yields rising. Again, we were at 190 on the 10-year before COVID started, and we were at sub 4% unemployment. So we can let this rise go on. The Fed's not going to react. That's going to disappoint Treasury markets. And from some of the guests you've talked to earlier today, I think one theme that I've been running with is this is a year where we may see the economy do better than financial assets.
Bill, what do you think it's going to take in order for the Fed to react?
I think Peter made a lot of great points there. One of the things, though, as a trader that and the futures as well, when you're using leverage, you got to be sort of ahead of things. And I think last week, although I agree with Peter, I think last week or 2 weeks ago when Fed Chair Powell had said that they're not considering the yield curve control or that operation twist, we already saw the market react a bit. And I think there's been a number of sort of capitulations in the bonds. It may not be totally done. I mean, you see what happened Thursday night into Friday morning when the bond market really cratered. But I think we're closer to the end of the bond market finding a low rather than sort of the onset of it. One of the things I'm looking at and playing on the future side is I'm selling put spreads in the 30-year bond, turning it to a risk reversal with a little more time frame and buying some call spreads. I think that's one of the ways to do that. On the equity side, I've been positioned in the banks. I think the banks are great. Have really been capitalizing on this rise in yields. I think they will continue to. So again, it comes to by being diversified to position properly. But I do think we're closer to the end of or at least a short-term pause in the rise of rates. I've been very bearish on bonds over the last few months. And long term, though, I am a bond bull, and I do think that this has just been an intermission. 2% could be achieved, but I think that too many people are calling for 2% that we may not quite get there.
All right, it's a 2-day meeting, starts tomorrow. We get the statement on Wednesday the 17th. That's St. Patrick's Day. But let's go to Jared right now for final thoughts, whether it's bonds or markets. What do you got for us, Jared?
Oh, I got everything. The reflation trade really in full gear today. And I'll just go through some of the heat maps that really describe and characterize the day's action. So we hit travel just before the bill. I'll only do that quickly, but United up over 8%, American up over 7%, Royal Caribbean, and both Carnival, those are up over 4%. And check out the restaurant industry. We got stimulus checks hitting. People are probably going to be going out to restaurants this week. And you take a look at some of these names here. Dine Brands, well, that's up 4% today, 7% over the last 2 days. Year to date, for most of these stocks, looking very impressive, up over 50% for that. Also, the industrials, infrastructure is making its way back into the news. Now, we have a little bit of a mixed picture here, but GE notably, what a tear that stock has been on over the last 6 months, up another near 6% today alone. And then I got to highlight the VIX because the VIX just dipped below 20. It's at 20.05. But it did hit 19 and change earlier, similar to what we saw here. So I got to wonder, is this going to be a low in the VIX and a high in stocks? Well, we got a lot of catalysts this week. So the reflation trade looks good, but FOMC meeting on Wednesday, that decision, and also quad witch expiration on Friday, huge volume day with rebalances. We're going to have that in focus for you.
And sometimes Jay Powell says something that can throw everybody off kilter. So we are watching. We got you covered. Peter Tchir, head of macro strategy at Academy Securities. Thank you. Bill Baruch, Blue Line Future President. All the best to both of you.